Bitcoin is pumping while gold and silver are lagging for now. This is your weekly precious metals and crypto price analysis, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard. Use the time codes below to go to your favorite metal or crypto straight away. We're going to start with gold, then do silver, then come back to this chart right here. This is the Bitcoin chart on the weekly time frame. Now, of course, if you want to buy gold and silver bullion, head over to ainsleyBullion.com.au. If you want to buy crypto, head over to ainsleycrypto.com.au. And if you want a best of both worlds, digitized gold on the blockchain, which is backed fully one-to-one with real physical metal, head over to goldsilverstandard.com and check that out. It's well worth looking at. So here we are with gold on the weekly time frame, priced in US dollars, 2020 US dollars, and it's the tradingview.com website. Now, quickly take a look at where we were last week. This is where we had a look at Chainlink plus the usual gold and silver prices. And gold here was at $2,025. You can see on the daily time frame, we had been talking about the fact that we were still above this downtrend line. So it was looking okay so far. We weren't really pumping. We really want to see the price pump and hold above this uptrend line, in my humble opinion. Of course, anything I say here, not financial advice, not necessarily the opinion of Ainslie, the company itself. But because we were above this trend line, I was just saying we're just in a sort of a ranging pattern at the moment, and I wanted to see it hold above this downtrend line. You can see we had a little spike down to this area that I had drawn in as a possible area of support, certainly hit there, but it was a spike on the daily time frame, so it's an intraday spike, and then we closed above it or just above it. So that's why I was still thinking, okay, look, we may not see lower prices from here. So where have we gone in that time? Let's pop on the indicators and head down onto the daily time frame. And what you can see in the last number of days is we've just remained above this downtrend line. So far so good. There's no panic needed to think that we are definitely heading down to, say, my next target. My next target, just out of interest, would be $1,975 roughly. It's this area of support right here. I would hopefully want to see a bounce and maybe a double bottom at that point, but because we are above this downtrend line and we've remained above it for the last 7 days, I'm still in the same opinion as of last week. So nothing to panic about, not necessarily going to see lower prices from here. The longer that we trade above this downtrend line, the more positive that I am that we would see a bounce to the upside, but still just within this little trading range right here. But you can see very clearly a bounce here. We came back up to the 2045 level. We're just ranging in between this level here of 2015 and the bottom end of this rectangular box here of 2050 right there. But interestingly, in the last 24 hours, we've seen a spike and, what do you know, a test again of this downtrend line. So a spike right down, right on the money there to that downtrend line, and so far opened green for today, and that's Tuesday, the 13th of February, 2024. So this is probably going to be a very brief gold analysis. We're just in a trading range at the moment, just again between that 2015 to 2050 range. And until we break out of either of those, we're just going to say we're in no man's land at the moment. But as I said just before, the longer we trade in that range, the more likely I'm to say we are going to be breaking to the upside. Of course, I'm bullish on gold in the longer term as well. Of course, you can see very clearly if we head back to the weekly or even the monthly time frame. We're going back to August of 2020. We had the all-time high here, and then we had a double top there. We had what looked to be potentially a triple top, but triple tops usually aren't a thing. So we had that brief consolidation back down, and then we've recently made new all-time highs. So there is nothing that is telling me that we are 100% heading down and down and down and down from here. My bias is to the upside with gold, because we have recently made a new all-time high, and it's just a little bit of a consolidation pattern for me personally, again, not financial advice. So I'm more than 50% on the side of higher prices from here eventually, and it's good to see that we are above this downtrend line. Now, if we do break this, let me just extend this out a little bit for you. That's about there. If we do break down this downtrend line right here, then I'm going to say, oh, it looks like we're going to be heading down at least to test the low here of the 1,975 level. That happens to be, for me, and I'll put a link above to it now, my first low target for 2024 when we did our 2024 gold price prediction video a few weeks ago. And again, I'll put a link to that so you can check out that video. But that's the first low. My reasonable target for a low in 2024 was at 1,975 level. But again, positive that we are above this downtrend line at the moment. So just keep an eye out on that one. What you can do is you can pause this video, take a screenshot if you like, or even better, you could just pause this video and have a look at where the prices intersect and draw your own trend line going down through these prices, just noting the dates, etc. So you can do that and just keep an eye on that trend line. As I said, if it breaks, probably heading down to 1975, but so far so good. And what I want to see is, and I'd mentioned this last week, is a move back above and into and closing, at least on the daily, preferably on the weekly time frame, closing within this 2050 to 2060 area. And obviously, that it goes without saying, really we wanted to see it break out and hold above there. And for me to say that we are absolutely 100% heading onwards and upwards in the next weeks and months, it's going to be breaking this uptrend line right here. I would say actually either breaking this uptrend line first or breaking the $2,090 level. That's why I've had that level drawn in as well. You can see that resistance right there. So if we come up in the next number of weeks, again, we're just forward projecting here, and we break up and then come back for the retest, I'm saying we're absolutely going to be making new all-time highs very, very soon in the months and, of course, years to come. But as I said, positive for the moment because we are above this downtrend line. So that is gold, short and sharp. Let's take a look at silver. Not a lot to say with silver as well at the moment. Here is last week's video. And as I mentioned, we're in a couple of ranges. We're trading in a range between a Fibonacci level of $20.50 and the infamous $26 level. That's one right there. And we're also trading within this symmetrical triangle pattern as well. It has yet to break out either way. Of course, what I say is that you never get to the end, the very corner, the very apex of the symmetrical triangle patterns. So it has to make a decision at some point. And I think I was mentioning something about no later than, say, September, October, I think it was. We'll probably make a play for that sooner. But let's see where we are in silver. And that's on the daily. This was on the weekly, just show you there. Similar thing. So we're just really still within that range. We haven't moved a lot in the last 7 days. So if we go back and check, the price was $22.30. And we've had a 40-cent rise, basically. So a little bit of a dump and then a move up. So the positive was that here we are right here. The positive was that we did not come back to test this support line right here of $21.90. That was a key level that I had been speaking about. So it was a bit of a fake out. A move up to, let's see, $23, but so far has not broken. So let's see, do we have any trend lines that we can look at right here? Possibly this one right here is one, a little mini trend line within the larger symmetrical triangle pattern. And maybe you can look at this one, but this might not play out so well. Okay, you can see that as a support, but I'll leave that for now. So basically, you would want to see it break above this little downtrend line right here. And then, as I had mentioned last week, definitely come up to the resistance point here of $24.50. Okay, so once it breaks there, if it does, it breaks and hold $24.50, then you're going to be making a play for the top end of this symmetrical triangle pattern right here. So again, just really in that trading range at the moment. And can you notice it right here? Possibly playing out. I'm saying not saying it's definitely going to happen, but a possible W pattern playing out right here. You see that there and that. So if we do break out above this this downtrend line right here, if we break out of that, that could be forming a little W pattern, which tends to break to the upside, and actually the target would be around about that $24.50 area of previous resistance interesting how that all plays out, isn't it? So watch out for that potential W pattern in the silver price, and the price you want to look out for, again, just like with gold, you can pause this and just put this little trend line in through there if you like, and you can watch that yourself, or again, just pause this video and take a screenshot for your reference. So we are just in that trading range, yet to break down through this level, yet to break up through that level. That's pretty much all I have to say for the silver price. If we do break down, watch for the Fibonacci level here at $20.50, $20.60. And as I said, breaking up the $24.50 area before we make the play for the top end of this symmetrical triangle pattern and the infamous $26 level. We've had about 30, 40 new subscribers in the last just a few days because of a video we posted, and I'll put a link above that now, called Silver Set to Surge. And so we've had a great bunch of views on that. So if you're a new subscriber, welcome to the channel. And very quickly, the $26 level that I've been talking about, it's a very infamous level. It's been a massive area of support and then a massive area of resistance. So for me, that's a very, very key area of $26. That's why I harp on about it all the time, just for those new subscribers to the channel in the last week or so. Great to see you on board. I hope you're enjoying the rest of the content as well. So that is silver, and we've done gold. Now we're going to head over to Bitcoin. Bitcoin has been pumping in the last week or so. I did a Bitcoin video a number of weeks ago, and we were talking about the Fibonacci levels, and I've been taking these Fibonacci levels from, and I'm still holding them, from the old high right here of $1,246 This is back in 2013, and the low right here of January roughly of 2015. So I find personally, not financial advice, I find the high there and the low there to still be key Fibonacci levels, and that's where I'm taking my extensions right here from. You can see that they were pretty well played out throughout the bull run of the sort of 2016 to 2017 era. You can see them very clear Fibonacci areas of resistance and support. So I'm just giving you a quick little bit of Bitcoin history because I want to apply that later on to the current price. But right here, that high and that low, and these are the extensions from that high and that low. So you can see in the last, well, the previous, not the last bull run, but the previous one to that, so 2016, 2017, we came up, we broke the all-time high, then came up to the key Fibonacci level right there. That was resistance, then a Fibonacci underneath that was support. Then on the way up, resistance, then support, a little bit of resistance there, and then we sailed through to bang on the money to this Fibonacci extension point right here. Again, that's taking it from this old high and this old low. And then you can see it was, look at that, very key area of support once again. And then areas of resistance and areas of support. And then even throughout the 2021, 2022 bull market as well, you can see it was acting as areas of resistance and support as well. Sort of more on the sort of intra-week mark, but you can see area of resistance right here. That's a previous all-time high. Areas of support right here. Now, when we get up to this area, we did not reach this Fibonacci area of that sort of 82,000 kind of area, but you can still see, at least on the weekly, we acted as areas of support. So this was a failed move to break to this level here, a failed move to break to this level here, but you can see these clusters of support still around the old Fibonacci areas right there. And then, just in recent times as well, and I mentioned this in the last video about Bitcoin, you can see when we bottomed out in October, November of 2022, where I think, and most people believe, that the bear market is done. That is the absolute low of around about that $16,000 US dollar for Bitcoin mark. You can still see that these Fibonacci levels, again from the really old highs and lows of 2013 and 2015, have been acting as resistance levels, as key resistance levels. And so that's why I have had these Fibonacci levels drawn in. And last time we did the Bitcoin video, I've been talking about this resistance level right here, around about 51,100 and something. Technically, we're looking at, 51,000 dollars right there. We're just coming up to that right now. Now, am I saying that is going to be a level of resistance? Absolutely no. It's just a point that I would like you to at least take a look at. We've had a big move in the last number of weeks. So that's 1, 2, 3, 4 green weeks in a row off the low of $38,600. And from that low, that is a move of rise in the last 1, 2, 3, 4 weeks. It's about a month, a 30% rise. Okay, so just take that into account. We've had 4 green weeks in a row. We have had a large dip though. Okay, so that's also something to take into account. But I'm just watching that area there just in case. Definitely not saying it's going to be a massive area of resistance there and then we just dump before the Bitcoin halving, because you do take into account we had this big spike up close to that area, but around about that $49,000 area before we had that consolidation back down. So I just want you to keep an eye on that just in case it's a bit of a fake out as such. Definitely not saying it's going to happen, but I do find these Fibonacci levels to still be somewhat predictive. Now, if they stop being predictive for me, then I will change my analyses and I will change it to take it from a new high and a new low. But so far for me, I'm sticking with these. So let's take a look at the relative strength index on multiple time frames to see what might happen to the price of Bitcoin in the next few weeks, etc., or at least see what the general direction, where the general direction is taking us. And of course, you can see that it is currently outperforming gold and silver, and even show you a couple of those ratios as well. But right here, you can see on the daily time frame, the relative strength index has moved into the overbought territory. Now, just because, or extremely overbought territory. Now, just because it is an extremely overbought territory, it doesn't mean it's going to immediately come back down into regular range. Okay, you can actually spend a number of days and the price can pump quite a lot and spend a lot of time in this extremely overbought territory before heading back down to the normal range. And then you're going to see sort of prices come down from where they've gone up to. Okay, so just because we're in there doesn't mean we're done. Okay, so I just want you to take that into account. Now, if we take a look on let's take a look on the 4 hourly very quickly. The 4 hour is a very popular time frame for people to use. And you can see we have gone into extremely overbought and then come out of it. Now we're back in. So look, we've spent a decent amount of time in extremely overbought territory on the 4 hourly time frame. I'm not saying this is going to happen, but that would go more to, a theory or a hypothesis that the Fibonacci level here of 51,000 could be a little mini top just before a little bit of a correction. Okay, on the 4 hourly, again, we've spent some decent time in extremely overbought. Looks like we're trending down unless we just see a huge move and we just stay in overbought, extremely overbought for a while on the 4 hour. But that would lend credence to the 51,000 potential little bit of a top, maybe a little bit of a consolidation before we head on our way up. So just do keep that in mind. So that's on the 4 hourly. Daily, I have showed you, you can spend a lot of time on the daily time frame in extremely overbought. And on the weekly time frame, very interestingly. Okay, so we have spent some time already in extremely overbought on the weekly time frame, but again, you can spend a lot of time in extremely overbought on the weekly time frame as well, and it looks like we're tracking back up again. And the big one here for me is the monthly time frame on the relative strength index. I think I've been speaking about Bitcoin in the bunch of videos I've done every now and then on this channel over the last year or so about the monthly relative strength index. I did a very good Twitter post, which had some, I should say, it had some very good views on it. And I'll put a link below in the info section of the YouTube page, maybe as part of the pinned comment too, to that Twitter post about the relative strength index on the monthly time frame, and we were just sort of hovering around this area right here. I think we'd come back down to test this area right here, and for me, I was saying back then, because we had broken above this average of the relative strength index, we'd broken above it, it was saying to me that we were, definitely on our way upwards, and you can certainly see that's been the case. I mean, most people would have recognized that in the first place. But you can see here that we are, in terms of the monthly relative strength index and where Bitcoin tops out at, we are nowhere near done for Bitcoin. Now, of course, black swan events can occur, and look, could something occur and then we just, yep, absolutely, of course. But if the cycle plays out anything like the previous 2 cycles, even the previous 3 cycles, you can see right here we go through periods of extremely overbought, and then we go into sort of the rough to low mid range. And then you can see here is each horizontal line right here. Those are the halving. So this is the 2024 halving. I've already got the 2028 halving in, just keeping an eye on it for now. But you can see very clearly we break up through the average, and then most of the time we spend above that average until we make a new all-time high, and then until we peak, and then we break down below it. I'll come to this in just a second. But you can see we break up, and then you have the halving, and then we head into extremely overbought territory. Now, on the monthly time frame, you can spend a long time in extremely overbought, and it doesn't mean, oh, we're in overbought, so I need to sell now. No, you can spend a lot of time in extremely overbought on the monthly time frame, that is, and I think this was roughly about a year. I think so. If we have a look at it right here, that's November of 2016 until when we broke down below, or broke back down into the normal range. That's in February of 2018. So the peak here was in December of 2017. So we actually spent from here to here is an entire year in the extremely overbought territory on the relative strength index on the monthly time frame. That's how long it can spend. So let's take a look right here on the bull run in 2020. You can see we spent, that's October of 2020, and then we peaked, well, technically we peaked here. So, but we spent from the first peak. Look, here's the thing. If you had sold here at 65, 66,000 rather than, what's that, 69,000, a few $1,000s difference, not a worry at all. So if you had been watching this and seen that we're going into extremely overbought territory, and that's the price around about 11 to 12,000 US dollars, we spent from October until March of 2021. So November, December, January, February, March. We spent a good 5 months in extremely overbought territory on the monthly time frame before we saw the first peak. Okay, now just in this particular instance, we came back down, and then we had another peak above into extremely overbought, and that's when we actually peaked at 69,000. So my point is, nowhere near done, in my humble opinion. If we do break into extremely overbought, which I absolutely think we will, you can spend a number of months there. So I think, in my humble opinion, Bitcoin has a lot of a way to go in terms of its price. We are pre-halving at the moment. Traditionally, within a few months after the Bitcoin halving, that's when you start seeing the prices really rocketing up. Some people are saying that we may have what is called a left translated cycle, where we may see a shoot up to really new all-time highs way before we normally would. So what I have drawn in right here, this is a little box here between, this is November to December of 2025. And that's based on the previous cycles. So we usually have a top every 4 years, and it's roughly in about that November to December time frame. So that's from there to there, no, from there to there, sorry, is 4 years. From here to here is 4 years as well. So there's a couple of cycles at least where the 4-year cycle has played out. And if it does, that's when it would play out right there. But you can see we're already at the price of $50,000 already. And we've got a long way to go until the end of the cycle, if the cycle ends right there. So some people are predicting that we have a blow off top way before then. Now, I have no dog in the fight on that one, but it's interesting to note that we are already here at $50,000 even before the halving. So just to take that into note, some people also say that we could be going into a super cycle. That was actually a bit of a narrative in the last cycle, the super cycle, and it didn't play out in that case. That's coming around again. People talking about the super cycle or the left translated cycle. Do your own research on those again. I don't have an opinion or a solid opinion either way. I'm going to stick with, for the moment, that the pattern is more likely. It's more than a 50% chance that we just see the cycle play out again as it has in previous cycles like that. So I'm sticking with those targets for now. But gee, if we're here and the cycle's here, where could the price go in that time frame? So the short answer is we don't have a crystal ball, but I am using my Fibonacci levels, again, from this old high and this old low, as my prediction targets for the moment. So let's just quickly go through those right now. Right, first little Fibonacci resistance level, that's at $82,400. The next one right here, $133,000 US, and I have one here at $2,015,000. And the last one I've drawn in, although I could certainly extend them out to as high as I want, is $348,000, call it $350,000 US per Bitcoin. I'm not saying it's definitely going there before we have our next bear market, which we will eventually, but those are the key levels that I am personally looking out for. Do you have some different levels? Post a comment below. So that is the quick little Bitcoin analysis as well. It's definitely outpacing gold at the moment. It looks at this stage that we may not see a dump before the Bitcoin halving starts. Traditionally, you see a little bit of a dump beforehand. This is again on the monthly time frame. You can see right here. You can see it right here as well. Let me do that. You can see it right down here. We have a bit of a dip before the halving. That may not occur this time, but again, take into account that $51,000 level. Could that be the level where we just have a little bit of a spike and then a red month next month? You never know, quite possibly, before we move onwards and upwards, which I think we're doing for Bitcoin for sure. So you can definitely see that Bitcoin is outpacing gold at the moment for now, and silver. A great handy tool to have, or a great handy ratio to have, is the Bitcoin and gold and Bitcoin and silver, and the reverse, silver to Bitcoin and gold to Bitcoin ratios, just to see how they are tracking against each other. So this is the Bitcoin to gold ratio. As it goes up, Bitcoin is outperforming gold. As it goes down, gold is outperforming Bitcoin. And similarly, what you can do is you can do the gold to Bitcoin ratio, and as that's going down, then gold is underperforming Bitcoin. But you can see it goes in, it goes up and down just like every single ratio does. So there may come a point where gold starts outshining Bitcoin and silver starts outshining Bitcoin. That would probably definitely be happening, I would say, when Bitcoin has topped out at its peak. And then you might see a beautiful little run in gold and silver to start outperforming Bitcoin at that time. So are you in all? Are you just in precious metals? Are you in the crypto as well? Let us know in the comments below. Are you also taking advantage of the AGS and AUS tokens on goldsilverstandard.com? We think that's as I said before, a great best of both worlds. It's digitized gold and silver on the blockchain, fully backed by real physical metal. So head over to goldsilverstandard.com to check that out. All right, that is gold, that is silver, and that is Bitcoin for this week. Please like, share, and subscribe. Balance your wealth in an unbalanced world. Take care, and we'll see you next time.